Welcome to Professor ALLAN'S Academy. We are commencing our lecture series on the subject of financial accounting and on the topic of partnership final accounts, which is of a lot of relevance for students of Standard 12. Well, partnership is governed by the Partnership Act 1932. It states that to run any business in partnership, we require a minimum of 2 partners. Maximum is limited to 20, and in the case of banking institutes, 10. Of course, the Companies Act has been amended and it can be increased to 50. A second important point is relating to the agreement amongst the partners. The agreement can be oral or it can be written. When it is written, it's called as a partnership deed. In the state of Maharashtra, the partnership deed is important to run any partnership business. Today we will commence with the topic on partnership final accounts. To prepare partnership final accounts, you require to prepare the trading account, the profit and loss account, the capital account, and the balance sheet. What will be given to you? The academic exercise is that you will be given a trial balance and adjustments, also called or referred to as additional information. A very important point to note. One, that any item of the trial balance, when you are posting, you will be posting it just once. The additional information will have an impact on 2 items, so there will be a double effect. For additional information, double effect. For trial balance, just 1. Another point to note. In the trial balance, you have to make a note wherever there is a percentage, wherever there is a date given, or any additional information. Like in the present case, you'll find stock, they have given you the date. So I make a marking against it. Then 10% investment, I make a marking against it because the percentage is being given. Then advertisement, additional information is given. Now I commence to go through the additional information and see what impact does it have on the items of the trial balance. Closing stock, of course not. Depreciation, yes. It will affect building and it will affect machinery. Bad debts of 3,600 are to be written off. It will affect sundry debtors. RDD, again, it will affect sundry debtors. Now, Pooja has taken goods for personal use, so it will affect her capital account. Pooja's capital account. Bills receivable dishonor, it will affect bills receivable and it will affect sundry debtors. Now we will commence to enter the figures. We start first with the trial balance. The item of stock, that's the opening stock. That date that is given us signifies the difference whether it's the opening or the closing stock. In the present case, the date given is 1/4/2022 and our year is ending on 31st March 23. So the opening stock given to us is 1,30,000. So trading account, debit side. Bills receivable, this will come balance sheet, asset side. And that too in the inner column as it has an adjustment. Wages and salaries will come in trading, but the trading account has a format. we always begin with trade opening stock purchases less purchase returns. So below that I can write to wages and salaries. And the amount 18,000. Then I have sundry debtors. Since bills receivable is written in the inner column, it signifies that it has got an adjustment. Therefore, I leave a line and then record sundry debtors 2,65,000. Bad debts. There is a format to be followed. To bad debts, add bad debts new, add RDD new less RDD old. So the RDD that is given to us in the trial balance will be the old RDD. But I am right now taking bad debts. So I record bad debts. I then take up purchases 2,96,000. Motor car, balance sheet, asset side. Outer column 1,36,000. Machinery, balance sheet, asset side 2,29,600. Audit fees, profit and loss debit, and the amount 2,400. Then you are having sales return. Again, as I said, it has a format by sales less sales return. And the amount of sales return 4,000. Next, discount, that's on the debit, therefore it will be debited to profit and loss, to discount, 4,600. We also term it as discount allowed. Building will come in the balance sheet, asset side, building, 1,50,000. Machinery has an adjustment, therefore machinery will come in the inner column, 2,29,600. So we complete with building. Next, cash at bank, balance sheet asset side 24,000. Investments, balance sheet asset side in a column because it has a percentage sign in front of it, 40,000. Then advertisement 9,000. And they say it's been paid for 9 months, that means 3 months is outstanding. So 9,000. Then you're having royalties which will come in the trading account. So 2 royalties. The amount 6,000. So that takes care of the debit side of the trial balance. Now we go to the credit side, general reserves. It is of the partners. It is accumulated profits and therefore it comes in the partners' capital account shared amongst the partners in the profit sharing ratio 14,500 each. Capitals by balance brought down 3,20,000 and 2,40,000. Creditors will appear on the liability side of the balance sheet and the amount 1,96,000. RDD, that is the old RDD. So it will come in this format, 3,600. Then you are having sales, 5,71,000. So difference to the outer column, 5,67,000. Then outstanding wages, liability side of the balance sheet. Outstanding wages and the amount 1,400. Purchase returns will be less from purchases. So 8,000. So the balance 2,88,000. Discount, that's on the credit side. So it's discount received will come on the credit of your profit and loss. By discount received, 3,600. Now we take care of the internal adjustments first. Stock, as I told you, it is with reference to whether it's opening or closing. 10% investments. So I will have to make a provision for the interest receivable. So interest receivable, 4,000, because it's at 10%. So the value of my investment is 44. Second effect of this, interest receivable, the interest, because it's an earning, it's an income, therefore it will come on the credit side of your profit and loss. The next is advertisements is paid for 9 months. So for 9 months, the advertisement paid is 9,000. Therefore, for 3 months, it will be outstanding 3,000. Outer column 12. Second effect of this, outstanding advertisement. The amount 3,000. Then you are having royalties, that is 6,000 entered. So taken care of 10% investments and advertisement. Now we go to the additional information. Closing stock, trading account credit side, buy closing stock, trading account credit side, the amount 80,000. Second effect will come in the balance sheet asset side, closing stock 80,000. Then we have to depreciate machinery. So that will come profit and loss debit to depreciation, machinery. And we are supposed to depreciate building also. So we first depreciate building, so less depreciation, and the building is to be depreciated at 10%. That's 15,000. Outer column 1,35,000. Second effect, building depreciation 15,000 in the profit and loss because it's a loss. Machinery, less depreciation. This is at 5%, so that will make it as 11,480. $11,480. Remove the difference to the outer column. $2,18,120. Second effect, 11,480 here in the profit and loss debit. Sum it up, the depreciation 26,480. Then we go on to the third adjustment. Write off 3,600 as bad debts. That means that will be reduced from our debtors. Bad debts 3,600. And the second effect will be over here in the profit and loss. The new bad debts 3,600. Then they are telling us to record 5% RDD, but that should be done only after the final adjustments. because there can be other adjustments that can affect my debtors. So I do it only at the end. So I go to the next adjustments. Goods taken by Pooja, 2000. This is by the partner. So by goods taken by Pooja, and the amount 2000, it will be debited to her account. So to goods, Pooja's account 2000. Then we are having bills being dishonored. So when a bill is dishonored, bills receivable reduces and our debtors increase. So bill dishonored. And the amount 6000. So outer column 50. Second effect of this, it will be added to debtors. So bills receivable dishonored. And the amount 6000. The net effect 2,67,400. And now I will remove the RDD on it. So the RDD is supposed to be taken at 5%, the new RDD. So 13,370. Second effect, here 13,370. Remove the difference to the outer column now. Now we will check it out. Debtors 2,67,400 less 13,370. That makes it 2,54,030. And here the total of the bad debts that comes to 15,370. That's done with. After that, once I am completed with all the adjustments, I then begin to close my trading account to find out the gross profit. That is 6,49,000 is the total. So to gross profit, carry it down, and we will get the gross profit now. So that comes to 2,07,000. We bring down this gross profit to the profit and loss by gross profit brought down. 2,07,000. Close profit and loss. That comes to 2,14,600. And you'll get the net profit. $1,53,750, and we share this amongst the partners, Raj and Pooja, in their profit sharing ratio, and their profit sharing ratio is given as equal. So 76,875. So we transfer it to their capital account, credit it to their profit and capital account. We write there by profit and loss account, profit 76,875. Now we take the total. Three lakh 3,31,375. So to balance, carry it down. 3,29,375. Same way we do for Raj. $4,11,375. 4,11,375. So we bring down the capitals. Raj's capital 4,11,375 and Pooja's capital 3,29,375. Sum it up. It comes to 7,40,750. $9,41,150. $9,41,150. We check out the asset side. It tallies. I hope that you have understood. Therefore, like, share and subscribe to my channel. Thank you.